Inflation, deflation, and stagflation. Three words you have likely heard on the news in recent weeks. Whether you believe Cathie Wood and her idea that inflation will give way to deflation and prices will drop, or if you believe the other extreme, people like Peter Schiff, who suggest that severe inflation will cause stagflation and a massive depression, one thing remains true. Jerome Powell's belief that this is all just transitory is now clearly a proven lie. After almost 18 months, the American people are waking up to the fact that prices are accelerating at a pace they have not seen since the 1970s, and the worry is that things could get a lot worse given the current political and social environment. Mohamed El-Erian appeared on CNBC to speak about these issues. His analysis reveals something interesting that is rarely talked about. While many take the words spoken by Federal Reserve officials as the gospel, the real truth is a lot harder to swallow. With demand at all-time highs and supply limited, El-Erian explains why we may be in serious trouble. Take a listen.
Okay, so we know the supply chain issues are a real problem, that this looks, even from the Fed's own perspective at this point, that this is not as likely to be transitory. In fact, some people don't even think that this is a situation that's going to be resolved next year. Could this get out of control at some point, Mohamed?
It could. And you've heard me say over and over again, we've got to change mindsets. For too long, we were worried about demand. Demand is not a problem. Supply is a major problem. And unfortunately, we haven't moved yet. The company's mindset has moved, but the policies makers' mindset, in particular the central banks and the Fed in particular, is not moving fast enough. So it can be an issue.
Here is the major problem with what Mohamed just stated. Although it's true that supply is now the issue, him saying that the central banks are not moving fast enough to fix it is simply baffling. Sure, central banks like the Federal Reserve have the ability to push policies that alter the demand side of the equation. But how does the Fed fix supply? It has already pushed interest rates down to near zero, making business as easy as possible, but it produces nothing but dollars. The Federal Reserve has no ability to increase the amount of chips, ships, or steel being created. Jerome Powell will continue to sit in front of the camera and lie to the world that if necessary, he will deploy tools to improve the situation. We've gone through most of 2020 and most of 2021 with no changes in the interest rate despite record high inflation numbers and a surging housing market. Now with Dallas President Robert Kaplan and Boston President Eric Rosengren both suddenly retiring early, the chances of a taper have gone down significantly. Both of these men were known as hawkish, a simple term used to describe influential members who were historically more likely to vote for raising the interest rates. If you were not aware, the Fed has come under serious criticism in recent weeks following revelations that several of its officials had owned and been trading individual stocks, a potential conflict with the Fed's role in the financial markets. Suddenly, days later, Rosengren stepped down citing health problems, and Kaplan retired early, admitting that the recent focus on his financial disclosure risks were becoming a distraction to the Federal Reserve's execution of, quote, vital work. The entire ordeal can be a full documentary by itself. Federal officials trading individual stocks, in my opinion, is a gross abuse of power, one that should be investigated from top to bottom. It is, however, unfortunate that these two men were among the hawkish group, which means that future tapers have become even less likely despite higher and higher inflation. And this is just some of the reasons. There is more evidence emerging that various power struggles within the swamp are creating a situation that forces the Federal Reserve into a lose-lose scenario. Take a listen to Mohamed explain exactly this.
We had a couple of market guests earlier who were positing that maybe it's less likely that the Fed will move now that you've gotten rid of Kaplan and Rosengren, who were two of the more hawkish voices. Do you think that's the case? There's also questions about, is Jay Powell going to feel this extreme pressure, especially right now, with the Biden administration considering whether they're going to renominate him? You heard what Elizabeth Warren said last week.
Yeah, I mean, we don't know. I mean, that's the problem, is when you allow opportunities to go by and you don't exploit them, you end up in this lose-lose situation. And it is a lose-lose situation because do they really want to start tightening monetary policy into a slowdown? Already the Atlanta Fed measures suggest that we're going to have a significant slowdown. We've had a significant slowdown in GDP growth in the third quarter. So yeah, they're ending up in this difficult situation. And I feel for them, but it is unfortunately a problem of their own making.
We've heard this all before, when experts would come out and say that the Federal Reserve is stuck between a rock and a hard place. This is what they meant. they only have one other real option, that is, negative interest rates. Something that has been tried in other countries. After the 2008 financial crisis, policymakers in the Eurozone, Switzerland, Denmark, Sweden, and Japan allowed rates to fall slightly below 0%. Under this policy, banks and other financial institutions are required to pay interest for parking excess cash, so your savings account in the bank would be charged money instead of accruing money. The entire practice is highly controversial and somewhat untested with large economies. Where we're headed, nobody knows, but we've seen the effects of inflation and low interest rates on economies around the world throughout history. When parking your money in a bank actually costs you money in the form of inflation eating away your buying power, people and businesses naturally do what any logical human would do. They begin to invest their money into things that are outpacing inflation. Real estate, stocks, and commodities. You can see the effects of this right now by looking at a chart of any of these three. In Argentina, where inflation has reached record highs, the stock market has actually surged with it. Watching this decade unfold will be interesting from a financial perspective. How the Fed deals with this incoming tsunami of inflation will be the test that paves the way for America's long-term future. Watching this decade unfold will be interesting from a financial perspective. How the Fed deals with this incoming tsunami of inflation will be the test that paves the way for America's long-term future. Let me know in the comments where you think we're headed, and please make sure you hit that subscribe and like button if you enjoyed.